All right, welcome back, everyone. If you're new, I'm Gerardo, creator of LookIntoHex.com, home of the best quantitative charts for HEX in the world. First link in the description. We're here to talk about HEX. We're here to talk about 25-cent HEX. Here we go again. What do I mean by that? Well, we've been here before at this price level, multiple times actually. That's going to play a part in this analysis. We're going to go over some short term, some fractals I see, some candle patterns I see, some general stats, and we'll call it a video. Subscribe if you're new, hit the like, share, all that good stuff. Let's get into the first part of this video, which is in the context of the last 4 months or so, HEX looks really good, right? And what do I mean by that? Well, back here, we kind of got ahead of ourselves, truly speaking, right? We were at 18 cents in August of 2021. And what HEX did from there was kind of nuts. It went from about 17, 18 cents late August to basically 56 cents, right? Mid-September. It's kind of nuts. When you go up 3x, right? When you have 200% gains in about a month, you tend to have a correction. Similar to even the recent move, right? December 8th to December 29th. A 200% gain move in 3 weeks. So it was faster. Had a little correction. So what am I getting at? I'm getting at the fact that we didn't form structure in this entire region from 18 cents to about 56 cents. And you could argue even lower, right? Because once again, this whole region over here was the pulse sacrifice phase, right? Where on the first day of the phase, actually, we had a local price top, a local price maxima, same as pulse X, go figure. Then we had a slight downtrend, and then she resumed our uptrend, basically. But again, once we left this 18-cent level, we never retested, for example, this region over here, this little local top region, which would have been nice. That 15-ish cent level. We just ran away. And so when did we test that 15 cent, ish level? Well, back here in November, right? We hit that level again, and then we even tested beneath it here in early December. I'd argue some of this was slightly impacted by that centralized exchange, Bitmart, which got hacked. Lost a lot of people's money, lost a lot of people's Ethereum, in general, a lot of ERC20s, and HEX was some of the coins that were sitting in there, and so they just dumped it on the market. But this was a negative externality, is an example, right? So I'd argue that. But nonetheless, I mean, there's still technical merit to saying, look, we wicked down to 12 cents. And if you look back here, that level was the level which was not crossed by full candle bodies during this bottoming region back here, right? And what's interesting is you can't say the same thing at 12.5 cents. So 12 cents was truly the sort of bottom, so to speak, this average bottom level, and we wicked straight to 12 cents. So we formed nice structure for here, I'd argue. And then what's the next level, right? This 17 to 22 cent level where we had this wick, where we had this little flag, where we even came back down to, right? This one red candle and then a bullish engulfing. It's 21 cent level. So that's 17 to 21 cent level. And look here, right? We tested it. Over here, we wicked to 21 cents. Where else did we test it? Held resistance here, cleared out some of those sell orders, maybe someone who got trapped here, for example. So, well, trapped, right? Because they were wildly in profit for the month thereafter. But you get my point, right? Is these support and resistance levels get weaker the more times you test them, because you're clearing out people who got trapped at a certain level and just want to break even, for example. That's just support and resistance 101. So what am I getting at here, right? We only have a few levels left to talk about. That 17 to 21 cent level, we tested once again over here, right? That was our bottom, that 19 to 22 cent level. So we seem to have had plenty of bids here to the point where on the short term we're forming a little inverse head and shoulders, but I'll talk about that in a bit. Point being, we've cleared out a lot of structure, right? We've made a lot of structure that we needed back in August to September or after September, right? It was kind of nasty. I completely agree. And but it might have been necessary. You know what I mean? So for now, I think it's a good sign that we've created structure here at these key levels. And I would argue how do I put this? If you look back here, we sort of formed a descending triangle, you could argue, right? 56-cent top and this 34-cent-ish bottom, which we tested once, twice, 3 times. You could argue here a 4th time. On the 5th time, we broke it, right? So the difference between 56 cents and say 35 cents is about 21 cents. 35 minus 21, about 14. So then you're calling for a 14-cent hex at that point, and we did reach that, right? So point being, this level was strong support for a long time. This 34, 35-cent level. And that played out at this local peak back here for the Pulse X sacrifice phase. So it was, I don't want to say it was obvious, but it was potentially more predictable than in other scenarios where we had a local top on the first day of Pulse X sacrifice phase, because we had a local top on the first day of Pulse Chain sacrifice phase back in July. Not only that, it was at a key previous support level and resistance, right? I'm looking at this wick over here, but for the most part, support, resistance, a clear inflection level, and price turned around, right? From 36 cents down to, again, continue forming structure. I like that. I like the structure we formed. I like the fact that I see this inverse head and shoulders fractal playing out. If you look at it from a short-term time frame, I pointed it out, right? This little inverse head and shoulders right here. And from a more macro perspective, these levels, right? So you're looking at higher targets, truly. If the inverse head and shoulders were to play out, you're looking at testing these 44 plus cent regions once again. And to my previous point of creating structure, well, where's our next resistance level if we've already cleared out most of them, right? I would argue the 46-cent level. Why do I say 46 cents? Well, because we only closed, 1, 2, 3 candle bodies above that. The rest were just wicks. So, right, we had a gravestone doji, I'd argue, over here at the literal top, local top. So 46 cents, I think, is the next clear level. Obviously, these short-term levels need to be breached as well, right? The short-term on this tiny inverse head and shoulders, the target for that is approximately like the 30-cent level once again, 30 plus cents, depending on there's a lot of dependent variables in that prediction, right? So take it with a grain of salt. And never take anything I say as financial advice. I'm not a financial advisor. Your generic disclaimer for this video. So I think once we clear the 30-ish cent level and we actually clear this local top, 36, I think we would be starting to potentially flirt with 44, 46 cents. All right. And that is also backed by potentially something like this. HEX likes to form parallel channels. If you are an early watcher of the videos, then you know that we used to talk about these all the time, these falling parallel channels, right? I started making videos back in April of last year. And we talked about, look, falling parallel channel, breakout, time to rock it, right? Falling parallel channel, breakout, time to rock it. Once again here, even on the short term here, once again here, and just a bunch of examples, right? and we formed one on the macro, forming from September to December, 3-month falling parallel channel. Oof. But what goes down might want to come up, and clearly it has been, right? The charts just say it. So after December 8th, we had this local bottom, and on December 14th, we had this huge candle that broke above this falling parallel channel that had been forming over the course of 3 months. Once we did that, yeah, not only did we do that, right, key milestone number 1, we actually broke the downtrend, the long-term downtrend, because even here at 24 cents, one could argue, well, still a lower high than this over here, 29 cents. But once December 21st hit, that wasn't the case anymore. We broke that. So you could argue this long-term downtrend was broken. You can actually see it. It was, right? Then we came back down to the bottom of what could potentially be what you see here, an uptrend parallel channel that we could be going into. I wouldn't be surprised. I'd like to see it. Right? I'm not saying it's going to happen. I have no clue what's going to happen. This is highly speculative. If any part of this video was speculative, which it all is, I would argue the highest speculation in the video is something like this, because I mean, we have a few data points, sure, a few days here and here. You could say we have 3 little clusters, right? 1, 2, 3 for this bottom region. So it's decent, but again, it's speculative. So just take everything I say here with a grain of salt. I did a little bit of math on the HEX chart earlier. Something really interesting to me is the fact that there's only a 40-day region over here where you could have bought between 35 and 56 cents. And so out of the almost 800 days that HEX has been on the markets, that's only 5% of people who could have, never had the chance to be break even or wildly profitable. So that means 95% of people potentially, or I shouldn't say 95% of people, I should say there was 95% of all of the time that HEX has been in existence. During 95% of that existence, one could have bought at levels which would put them either break even or wildly profitable given current price action. That was a mouthful, right? Oh, I actually missed one little point I was going to make earlier. Is I Googled 3 white soldiers just to see what that meant in terms of candlestick patterns. I'm new to all this stuff. You might want to go to someone like Jenkins for actual candlestick, dojis, 3 white soldiers, all that stuff. But currently here we have 3 green candles. Now the day hasn't ticked over. It ticks over in about 45 minutes. And so we'll see that. What did we open at? 24.5 cents. So if we close above that, which we're above it right now, in the next 45 minutes or so, these would be 3 green candles on the daily chart in a row. I like that, right? Because according to the 3 white soldiers definition I found on Investopedia, it basically says that, here, let's revisit it actually. Predict the reversal of the current downtrend. The key takeaways, right? I swear I had it in my head just a second ago. Basically, they're a good sign, right? Without getting too much into it. Again, I'm not a guy for that, for like precise candlestick patterns. Cool. And one more thing, actually, before we finish off the video, is the golden cross, right? That'd be cool if we saw one, because we've seen what happens with golden crosses before, or maybe you haven't seen actually. Whoa, this is quite the chart. I might touch on this, but we've only ever had one golden cross previously in HEX's history, right? This little death cross, golden cross scenario, which we formed a bullish, macro bullish formation above both averages, and then it was off to the races. And since this year was a fundamental event where people actually got more value in the form of inflation, You could argue that we never actually visited these levels again, right? In terms of value, if you were staked for that day. So after that golden cross, basically it was a 100x from half a penny to 50 pennies. Nice 100x. So not only that, we could touch on RSI levels, but what happened here, right? We had not a 2x move into a macro bullish formation like back here, but a 3x move. And that actually makes me think about something really interesting here. Hear me out for a second. Back here, we had a 2x move, and then we consolidated, basically went sideways for about a month. All right? After death cross, waiting for our golden cross. What happened over here? You could say, okay, just hear me out. We went 2x. I know we went 3x, but let's say we went 2x, had an outlier event, which is something out of the ordinary, statistically speaking. So sometimes you can discard those. Just hear me out here. Because of the pulse chain sacrifice event, or pulse X sacrifice event, excuse me. So you have this sort of hybrid weird formation between the September, October region of 2020 and this July, August region of 2021, and it makes something like this. I know it's a weird analysis, but you basically had this 2x move. This is what I predicted back in December. I said, look, potentially a 2x move, and then just sideways for about a month. I said that would be actually mad bullish. And well, what happened? 16th of December, currently ticking over to 16th of January. That's about a month. And you could say we pretty much went sideways at this level, with the exception of, again, this little bubble region. I think it's fair. I think it's fair to say, because if you'd, for example, been just expecting to go between 19 and 25 cents for about a month, didn't check the price chart, came back, we're sitting between 19 and 25 cents. You see what I'm getting at from a longer term perspective. So you could probably see that on something like a monthly chart, for example. You're basically at the same spot. So I think that's very, very bullish, right? Potentially something like this plays out, right? Which was 100x. And how long did that take? About a year to 100x. So maybe diminishing returns comes into play and we don't 100x, maybe we 70x, 50x, 30x, right? But even then, even at 10x, right? You're like, let's bet probably better than these other coins, right? Like Bitcoin and Ethereum, that would take much, much more to 10x. So golden cross would be cool. Actually, should touch on the fact that it's incoming soon. I was gonna make a whole other video on this, but we can touch on it here. Because if you look at the past the past 50 days and the past 200 days, I was looking at this last night, we're starting to replace values. We're starting to place lower values with higher values, meaning both of these will start curving up. And I believe yellow should start curving up faster, which is our 50-day moving average. So we should have that golden cross actually pretty soon. I haven't done the math on exactly when, but I wouldn't be surprised if we saw it in the next month or so. Probably sooner, to be honest. So yeah, I just realized some of you guys probably want to know where the top of this channel would be. Right now it's sitting at about 44 cents. Funny, right? Because we were touching on the fact that the next resistance levels could be between 44 and 48 cents. Could happen very quickly. I mean, HEX likes to move very quickly. Crypto in general likes to move very quickly. So always be, again, never financial advice. I'm not a financial advisor, but I would say be hedged in the sense of don't, instead of being 100%, be 99 and 1%, just in case. Actually do whatever you want, just scratch that. But we're gonna finish the video off here. I hope you enjoyed it. Subscribe if you are new. If you are here and been here for a while, I appreciate you. Thank you for continuing to watch the videos. Hope I can bring you some value in the form of, I don't advocate trading really. I like to have fun looking at the charts. I don't look at charts all day, hence why I haven't been making as many videos, but I want to get back into it to keep you guys company. And yeah, it's fun to look at, but at the end of the day, Got my guitar back there. I've been playing that a lot more lately. Absolutely loving that. So go do some things while price recovers, right? Go do something. Yeah, with that said, I appreciate you watching, and I'll catch you in the next video. Peace.